These are the group members. We have me, Aini Yasmina binti Ja'far Saj, and then Nurul Shawarfana binti Shafriyal, and also Nur Dayana Hani binti Nur Azam.
Assalamualaikum to Prof. Madhya Dr. Ali Suzana. I am Dayana Hani from Group 1. So, today we would like to present our group project for ACC466, which is focused on financial analysis using financial ratio. So, financial analysis is important because it helps stakeholders understand how well a company is performing financially. One of the most common and effective tools used in financial analysis is financial ratio, as they provide clear insight into a company's ability to manage cash, pay debts, and also generate profit. To analyze and compare the financial performance of two major dairy companies in Malaysia using financial ratio. Financial ratio is allow us to assess how effectively a company manages its resource, handles its obligation, and achieve profitability. By comparing these two ratios between the Farm Fresh Berhad and Dutch Lady Milk Berhad, we are able to identify similarities, differences, and overall financial health between the two companies. The findings from this study are useful for understanding which company perform better in terms of liquidity, efficiency, profitability, and leverage, especially for decision-making purpose. Farm Fresh Berhad is a Malaysian dairy company that was founded in 2009. The company mainly focuses on producing fresh milk and dairy-based products. One of the Farm Fresh key strengths is that it operates its own dairy farm, which allow the company to maintain better control over product quality from the farm level until it reaches to the consumer. In addition, Farm Fresh emphasizes the delivery of fresh, nutritious, and high-quality products while also promoting sustainable farming practices. Over recent years, the company has expanded its product range and strengthened its market presence, not only in Malaysia but also in selected international markets. This expansion reflects the company's growth strategy and increasing the competitiveness in the dairy industries.
Dutch Lady Milk Berhad, which was founded in 1963, is one of the oldest and most established dairy companies in the country and is part of the Friesland Campina Group from the Netherlands. And the company produces various dairy products such as milk, yogurt, and nutrition products. Dutch Lady focuses on improving product quality, promoting healthy nutrition, and strengthening the market presence.
This slide shows the current ratio, which measures a company's ability to pay its short-term liability using its current asset. For Farm Fresh Berhad, the current ratio is 2.93 to 1. This means that for every 1 ringgit of current liability, Farm Fresh has 2.93 ringgit of current asset. This indicates a strong liquidity position. For Dutch Lady Milk Berhad, the current ratio is 0.84 to 1. This means that for every 1 ringgit of current liability, the company has only 84 cents of current asset, which indicates lower liquidity. Overall, Farm Fresh Berhad has a better short-term financial position compared to Dutch Lady Milk Berhad.
Is quick ratio. It measures the ability to pay short-term debts without relying on inventory. So, a higher ratio indicates a better performance. So, as we can see, Farm Fresh has a higher ratio, which means that it has a very strong liquidity and can easily pay short-term obligation compared to Dutch Lady. With a ratio of 0.36, it can be considered as weak liquidity and may struggle to pay short-term debts.
Next, let's take a look at the profitability ratios. Firstly, the gross profit margin. From this, we can see that Dutch Lady Milk Berhad has stronger gross profit margin with 33.77% than Farm Fresh is only 26.67%. This indicates that Dutch Lady has better control over its production costs. But however, when we look into the net profit margin, it shows that Farm Fresh shows slightly a higher net profit margin of 7.8% compared to 6.69% for Dutch Lady. This shows that FarmFresh business operation are well managed, as it is able to retain more profit after all expenses. Moreover, Dutch Lady clearly outperformed FarmFresh in return on capital, with 22.97% compared to FarmFresh is only 7.74%. This shows that Dutch Lady uses its invested capital more efficiently to generate their profit. And lastly, Dutch Lady also has a higher return on asset at 9%, while FarmFresh record only 4.95%. This indicates that Dutch Lady uses its asset more effectively to earn more profit. Overall, Dutch Lady Berhad has demonstrated a stronger profitability performance compared to FarmFresh Berhad.
For inventory turnover ratio, which measure how efficiently a company manage and sell its inventory, FarmFresh Berhad, the inventory turnover is about 4 times per year. This means the company replaces its inventory approximately 4 times within an accounting period. Meanwhile, for Dutch Lady Milk Berhad, the inventory turnover is also 4 times per year, indicating a similar level of inventory management efficiency. So overall, both companies show the comparable efficiency in managing and selling their inventory. This slide shows the average collecting period, which measures how long a company takes to collect payment from its customer. FarmFresh Berhad, the average collection period is approximately 80 days. This means the company takes about 80 days to collect its receivable during the accounting period. Meanwhile, for Dutch Lady Milk Berhad, the average collection period is 40 days, indicating faster collection from the customer. Overall, Dutch Lady Milk Berhad is more efficient in collecting its receivable compared to FarmFresh Berhad. I will continue with the total asset turnover ratio, which measures how efficiently a company uses its total asset to generate sales. FarmFresh Berhad, the total asset turnover is 0.63. This means that for every RM1 of total asset, the company generates 63 cents in net sales. For Dutch Lady Milk Berhad, the total asset turnover is 1.35, which indicates higher efficiency in using asset to generate sales. Overall, Dutch Lady Milk Berhad uses its asset more efficiently compared to the FarmFresh Berhad.
We have leverage ratio. Under leverage ratio, we have debt ratio, which measures the percentage of assets financed by debt. So for FarmFresh, 45.8% of total assets are financed by debts. So it shows that FarmFresh has moderate debt and lower financial risk compared to Dutch Lady. 53.3% of total assets are financed by debt, and this means that Dutch Lady has higher debt and higher financial risk. Move on to debt to equity ratio. It measures how much debt is used compared to shareholders' equity. So for FarmFresh, the contribution of creditors is 88.03% from contribution of investors. So this means that FarmFresh has a balanced use of debt and more financially stable. Whereas for Dutch Lady, the contribution of creditors is 113.94% from contribution of investors, and this means that Dutch Lady has high reliance on debt and higher risk if the profits fall. Have time interest earned, which measures the ability to pay interest on debt. So for FarmFresh, the company is able to meet its interest payment by 5 times, which means that FarmFresh can cover interest payments, and this number is acceptable but not very strong. And as for Dutch Lady, the company is able to meet its interest payment by 20 times, and this means that Dutch Lady has a very strong ability to pay interest and low risk of default.
In conclusion, Farm Fresh Berhad and Dutch Lady Milk Berhad show different strengths in their financial performance. Farm Fresh Berhad has stronger liquidity with higher current and quick ratios, meaning it can more easily pay its short-term debts. It also has a lower debt, which makes it less risky. However, Dutch Lady Milk Berhad performed better overall in profitability and efficiency ratio. It has higher returns on capital and asset too, which indicates better asset turnover and collects money from the customer faster. Although Dutch Lady uses more debt, it can easily pay its interest expenses. To sum up, Dutch Lady Milk Berhad is the better company to invest in because it generates higher returns and uses its resources more efficiently. For Farm Fresh Berhad, it may still suit investors who prefer lower risk and stronger liquidity, but Dutch Lady offers better performance for investment. That's all from me. Thank you.